LiteFinance, the world of financial freedom.
Hello guys, it's Monday, September 12th. It's time to start the market forecast. So the coming week promises to be very exciting. We will get one of the hottest numbers currently observed on the market, which is US CPI, i.e. inflation data. So those numbers are key ingredients for the Fed to know what to do next in terms of interest rate hikes and for the whole market to assess what is going on currently with the global economy and the supply chains. So first we will check the calendar and then we will go into some more detailed analysis of particular assets. Okay, so today we start with the data from Great Britain about the GDP, manufacturing production and trade balance. Then we go straight to Tuesday, and this is the day when we will get the juicy stuff, which are firstly payrolls from the UK, data from Germany about inflation and ZEW economic sentiment. Next we will receive a monthly report from OPEC, and after that CPI data from the US. So basically we can expect volatility right from the start of this week. Although Powell made clear that they will not pivot from the current approach and that they will be consistent with the rate hikes series as they announce, and to change that they will have to see inflation going down significantly. And after that, they will be able to start thinking about softening the monetary policy. So that's about it for Tuesday, and now we move on to Wednesday, and it starts also with the CPI data along with inflation on producers' side, but this time from Great Britain. And PPI we will also get from the US that day, and in the afternoon we will receive numbers about crude oil inventories and late in the evening GDP figures from New Zealand. Next, of course, is Thursday, which starts early with the labor market data from Australia. And then during the day we will get a Bank of England meeting minutes, and in the afternoon a list of data from the US, namely retail sales, initial jobless claims, Philadelphia Fed Manufacturing Index, and industrial production. Last but not least, on Friday, retail sales from the UK and important CPI data from the Eurozone, which will also be more speculation as for the ECB's next move after the 75 basis point rate hike last week. Okay, so for today's video, I wanted to talk about the crude oil price and its upcoming rally that will happen in December or maybe even already in November. Why, you might ask? Well, simply because of this chart. This is the chart that shows how fast the strategic reserves are being depleted in the US. You see from some time that the price of crude oil is falling. One reason is because the market is currently oversupplied, and second is the release of those additional barrels of reserves, which helps even more. But I need to remind you that SPR are reserves that a country is keeping in case of war and higher demand therefore needed to conduct military actions, or some unprecedented action from OPEC side, so they can't deplete them entirely. As for November, we all remember that during that month, midterm elections are held in the US, and Democrats, which currently have a majority, don't want to have high prices of oil before elections, since the current polls are not in their favor. So you can see it clearly on this chart from commodity context. Here you have compiled data from EIA, and they clearly show that the release of those reserves is planned until November. Additional thing that is planned is output reduction from OPEC in October. So most likely upcoming weeks are the last ones when we will potentially see some down moves in oil prices. As for the CPI data, they shouldn't influence the Fed's decision when we see some further drop. As I stated before, they are waiting for the whole situation to come back to normal, i.e. 2% levels. On the other hand, I would be rather cautious when we will see some higher reading. Therefore, it could mean the Fed will raise the rates more aggressively, and therefore the dollar should strengthen even more following this speculation. So if we look at the Euro-USD chart, I would not be surprised if you will hover around this green area of resistance between 102.67 and 103.77 right before the data publication on Tuesday. But after that, I would be surprised if we would see the parity level again. And so, okay, that is all, guys. Thank you for watching, and till next time, goodbye.